Hello and welcome to my new video. So in this video we will talk about which order block to choose. So there are different kinds of order block because the market is constantly changing and evolving. The type of order block that is most likely to be successful will depend on the current market condition. For example, a breakout order block that is more likely to be successful in trending markets, while retracement order blocks are more likely to be successful in ranging market. So here we can see that this is structure break order block. So what is structure break order block? It is nothing but an order block that breaks the structure. So here we can see that there are two different kinds of order block. This is the structure break order block and this is the origin order block or retracement order block. So what is difference between structure and origin? That structure has broken some kind of structure. Here we can see that this higher high was broken by this structure and this is the origin order block. It is the origin of this move. So it is origin of this higher low. That's why it's called origin order block or retracement order block. Because if price comes here all the way to the original block, it retraces at least 70 to 80%, or we can also call this retracement order block. And the second order block is origin order block. So which is the last order block of the move. So as we can see, this is the last order block of the move, which is the original block where the actual move started to go up. So it is, if market is going to the upside, then origin order block will be at higher low, and if market is going to the downside, then it will be present at lower high. Now in this scenario, which order block to choose? So we can see that price is making higher high, higher low, higher high, higher low, higher high, higher low, and there was a change of character over here. And price made this order block, and then again there was imbalance between this order block and this order block. Again this order block and this lower high. So there is imbalance present over here. In this situation, which one will we choose? So as we can see that price has broken, this order block has broken this higher low, and there was imbalance and liquidity present. That's why we will choose this order block first, which is structure break order block. Okay, and if price reacts and goes to the downside, then in future price may come here and react from this order block, because once this is mitigated, it becomes liquidity. This order block has broken this lower low, there was imbalance over here, and now this higher high is mitigated. So the small OBs have been mitigated, so it becomes liquidity, and there was imbalance, and this is order block. So first price will react from this order block, or maybe it can come to this also. But in this scenario, we can see that mitigate this order block, it will go down. So you can enter that this order block for short term or intraday trades, and then in future price may come to this order block and mitigate this order block, and it will start to go down. So that's how we can use structure break and origin order blocks, or we can say breakout order block or retracement order block. So price retraces at this order block and goes down again. And this scenario, we can see that price has made higher high, higher low, higher high, higher low, change of character. Price made lower low, lower high, lower low, lower high. If there is no liquidity, if there is no structure between this structure break order block, then it's a smart money trap. Remember this. Now this order block has broken this structure, but there is no liquidity. If there is no liquidity, then this is smart money trap, or we can say this is inducement. So if there is nothing to induce, then price will induce this lower high as a single low liquidity. Price will hit this zone and it started to go down. So in this scenario, we can see that this order block has broken this left side structure, okay, but there is no liquidity. So if there is no trend line liquidity, then price will use this single lower high as liquidity, or it will induce this lower high. Price will mitigate this original block and it will start to go down. So if there is no liquidity, then price will skip this order block and it will go up, mitigate original block, induce this lower high, and price will go down. So what is happening over here? If retail traders are selling over here, then their stop loss will be hit because there is no liquidity. Price will induce this high, hit this order block, and it will start to go down. So let's see what are the different kinds of order block, and we will also see on real charts. So as we can see, this is order block which has broken this structure. So price came here, mitigated this zone, and it started to go down. Again, this structure was broken by this wick. Price came here. This was the original block. This was the lower high. Price came here, mitigated this whole zone, then it started to go down. So this lower low was broken by this order block because this is the lower high. Price swept all the liquidity, mitigated this order block, and then broke this structure. Price came here, mitigated this order block, and then it started to go down. If order block is big, then price can react from that order block multiple times. Because so this is 4-hour chart. So because this is 4-hour chart, there are multiple order blocks on 5-minute, 50-minute. So first price will mitigate this zone, price will mitigate this order block, and then price will mitigate this order block. So one 4-hour order blocks can have multiple 5-minute order block, 50-minute order block, or 1-minute order block. So as you can see, this order block has broken this lower low or this structure. So what is this? This is trend line liquidity. Price mitigated this zone. Because this order block has broken this structure, price came here, mitigated this zone, and then it started to go down. So this is on 1 hour. We can see that this order block has broken this structure. Price came here, mitigated this zone, and then it started to go down. Again on 1 hour, we can see that this order block has broken this structure. There was liquidity over here. Price came here, reacted from this order block. Again, there was internal structure over here, liquidity. Price reacted from this order block. So what is this? This is structure break order block. Price reacted from this order block. What is this? It's structure break order block because it has broken. So price reacted from this order block. Again, price has reacted from this order block, again going to downside. So what is this? It's structure break order block. So now we will look some examples on crypto. So here we can see that in XRP, price shooted to the upside. And here, this was the lower low. Price came here, broke the structure, this order block swept the liquidity, broke the structure, and created liquidity over here, mitigated this order block, and then it started to go down. Again, price broke the structure, created liquidity, mitigated this order block, and then it started to go down. Now we will look some examples on TradingView. So here we can see that this is higher high over here. So on 4-hour we can see that this was the higher high, higher high, higher high, high low, higher low, higher high, higher low, higher low, lower high, lower low, lower high, lower low. Again we can see that there is some kind of order block. This is structure break order block which has broken this structure. So on 50 minutes we can see that there was imbalance over here. This structure was broken by this order block. There was imbalance between these candles. So there was imbalance between this candle and this candle, and this was the order block. So what is this? This is structure break order block. So we also have Smart Money course which covers from basic to advanced. It goes in depth in every topic like how order blocks are formed, how liquidity is formed, why there are imbalances, and how everything is connected to each other. So if you have any doubts, we can do one-on-one after watching the course. So here we can see that this structure was broken. Again, this structure was broken. So we can see that this is our structure break order block and this is our origin order block. So price reacted from origin order block over here. Again, price reacted from origin order block. So what is this? This is our structure break order block. So this is our lower high. So what is this? This is our origin order block. This is our structure break order block. So here this is our. So also remember that origin order block can also be a structure break order block. For example, if price is going to the downside and origin order block breaks the structure, then it becomes structure break order block. So origin order block can be a structure break order block, but a structure break order block cannot be a origin order block. Remember this. So price will react on this order block because it has broken the structure. Again, what is this? This is origin order block. So you can take any chart and start marking which order block is this. So you will. So that's how you can practice like which order block to choose. So here also, don't only focus on higher time frame, but also focus on what internal structure is doing. So if you are doing intraday trading, then you know that where market is going to. For example, here we can see that 30-minute time frame has broken this lower low, but actually price is going to the upside. Here we can see that higher high, high low, higher high, higher low. Price is going to the upside, but the internal structure is to the downside. So you can also take trades based on internal structure. So there is imbalance, liquidity, and there is a structure break order block because this structure break order block has broken the structure. Again, there is a structure break order block here also. And here we can see that price has reacted from this origin order block. So if you go to 5 minutes, 10 minutes, so price was going to the upside. Here we can say price was going to the upside, but suddenly price started to go down. Price made a change of character over here. So you can take intraday trades to the downside. And again, price broke this structure again. So you can trade this move also to the downside because you know that for short time price is going to the downside. And then again price reacted from origin order block. That was high low. So here also we can see that price has broken this lower high, lower low. This lower high was broken. So what is this? This is again structure break order block. This last order block will be our origin order block. We can also use this from here also. So what is this? Again origin order block. So that's why price reacted from this original block and then it started to go up. But again, price started to go down. For intraday, you can use structure break order blocks and on higher time frame, price may react from original block in future. If price doesn't touch the original block, it doesn't mean that it will never touch in future. It is important to remember that order blocks are not always reliable. The price may not always break in the direction of the order block. However, by understanding the different types of order block and how to identify them, you can increase your chances of making them profitable trades. Here are some reasons why there are different kinds of order block. The size of order block can affect the amount of resistance or support it provides. A large order block is more likely to provide strong resistance or a support zone than a small order block. The time frame. The time frame of the order block can also affect its significance. An order block that is formed over a longer time frame is more likely to be significant than an order block that is formed over a shorter time frame. The volatility of the market. The volatility of the market can also affect the significance of order block. A more volatile market is more likely to break through order blocks, while less volatile market is more likely to respect them. And also the premium and discount zone. Here on 50 minutes, we can see that this low was broken by this structure break order block. So price came here, mitigated this order block, and then it started to go down. So if you like this video, like and subscribe. Let's meet in next video.